Hello and welcome to episode 227 of the Money to the Masses podcast with your resident expert as always, Damien Fay, and me, Andy Leaks. Damien, how you doing?
I'm good, Andy. Good. As usual, we've been busy this week cracking out a load of content, some of which will be on the podcast today. But yeah, busy as ever. No football, so we're not going to talk anything to do with football. Just, Money to the Masses all the way.
Sorry, I wasn't distracted, Damien. I was smirking and smiling because, as ever, you've brought some notes to the podcast. And if anyone has ever seen Damien's notes before, he uses a wicked system where he kind of doodles. And if I tried to do this, it would look a mess. But the way you do it is brilliant. Damien's got doodles and pictures of aeroplanes and arrows. It's brilliant.
Yeah, you've given away something on the podcast there, what we're going to talk about this week. But it's called a sketch note. And it's a single page of where you just do drawings, doodles. If you like drawing, even if you're no good at it, if you're interested, find and Google sketch notes. It's a sort of a way of making quick notes about anything you're going to do. If you're listening to something, so if you go to a conference or you listen to a presentation, the idea is if you keep writing words over and over and over again, you're not really listening, you're not engaged, but you should be able to just, a picture paints 1,000 words, draw a picture, an image, and it should be able to remind you of what was being said. So, I always do it. Generally for the podcast, some notes just so I can talk off the cuff quickly about a topic without having to read things and anything I want to remember. So perhaps I should just start publishing them ahead of the podcast or after the podcast.
Yeah, we should definitely do that.
Instagram loves a picture.
It does love a picture. Right, enough about sketch notes.
Before we go on with the podcast actually this week, there's two things I want to talk about very briefly. Tarquin has blown our minds.
Blown the doors off.
He's not blown the doors off, blown the roof off, and surpassed all Money to the Masses mugshot expectation. He's not only taken the bar, he's taken it to the top of Snowdonia, I think it is actually.
Yeah, that's right.
So if you go on our Money to the Masses Instagram account, he's been immortalised on there as well as the Wall of Fame in the office. Tarquin won a mug, one of those pieces, the golden ticket, the Willy Wonka's ticket, and he sent in his mugshot as we ask everybody to do so they can appear on our Wall of Fame and be immortalised. And when we got the picture, we all basically fell off our chairs because he's up Snowdonia climbing in all his climbing gear and ropes with a Money to the Masses mug. It is amazing. Now, not all of your mug shots have to be as mind-blowing as Tarquin's, but you've got to go and look at it just for the sheer brilliance. And I burst out laughing when I saw it. I was travelling on a train after having a meeting in London, and the Lauren sent it through to me on email, and I had a look at it, and I just burst out laughing on the train because it is so brilliant. So, Tarquin has set the bar. He's almost been immortalised now, I think, in Money to the Masses history for that picture. But we don't have to have your picture quite as incredible as that if you want to be on the wall. But separately, if you haven't got a mug, then if you do appear in a picture with the Money to the Masses logo somewhere quite amazing, something different, then that could be mug-worthy, I think. I think we could open that up and say that might be mug-worthy.
Yeah, definitely. Get creative. We've said before, you're going to get rewarded for doing things mug-worthy. I think taking photos in strange locations or weird locations, or wacky, fun, brilliant, high, low, wherever you can do it, with the Money to the Masses logo or something to do with Money to the Masses or Damien or the podcast, then you just might get rewarded.
Yeah, it's one of the many ways. Obviously, whatever you think is mug-worthy, then do tell us and you might win a mug. The other thing I want to quickly mention is our newsletter. Now, we do a Money to the Masses newsletter every Sunday. We've done it for years, ever since I've been running Money to the Masses, so it's over 9 years old.
In fact, we've done even better than that because it used to be every fortnight, didn't it? And because it was so popular, we moved it to weekly.
And what I don't think we talk about it enough because we've been getting so much positive vibes about the newsletter. It's very succinct, there's no fluff around it, very minimalistic. There's an intro in it every week. It comes out at 10 a.m. every Sunday. It's an intro from me about some opinion of what's going on in the world of finance you should be aware of. Then we break it down to sections to do with money saving tips, news, pensions, investments, property, and then we have guides and bits and pieces in there. But what is unusual about our newsletter, it's not just our content. We go around the internet and go and find the best money content, whether it's national newspapers or other money sites, because we're curating the best. So with this one email, you find out everything that you need to know about money and need to worry about. So that's serendipity. You get the email on a 10 a.m. on a Sunday. You flick down it. If any of those stories are relevant to you, you click on it, boom, you're there. But the other thing that people don't realise, and again, we do so much at Money to the Masses we don't shout about, and products and bits and pieces, is that in that email, every Sunday, somebody gets up and does a roundup of the newspapers, the money sections and the property sections and the weekend papers before you're even out of bed on a Sunday. And they've been doing that for years, and compiles the best of the Sunday papers property sections and the Sunday papers money sections. So those stories that have gone out in the national press, and you can then just click through to those. And we do that every week. So sign up to the newsletter if you're not part of it. It's moneytothemessages.com/newsletter, and that will be with you at 10 a.m. every Sunday. And a lot of work goes into that, but again, we just don't shout about it.
Good stuff. So what have we got on the pod this week?
Right, what we're going to definitely not do, is investing. We're going to have a week off of investing. We've got 3 other pieces this week. One to do with pensions, and it's more to do with workplace pensions, and something that people who may be earning below the income tax threshold need to be aware of. And I want you to sign a petition, so we'll come on to that. PPI. Now, that is a major thing that's going to happen in the next 10 weeks. It's been going on for years, but in the next 10 weeks there's a deadline looming. We're going to talk about PPI and why you need to act now. And the final thing is travel insurance. We're all thinking possibly of going on holiday, whether it's abroad or staycations, and we all have to go and look for travel insurance. We've done some pieces recently when we talk about if you've got medical conditions, but one of the almost unanswered questions out there is, when you see a policy and it lists the things that it's got on it, what should a good policy have on it? And so we're going to go through a checklist of some of the things to look out for and ensure your policy covers. So, for example, how much medical cover should it have? Because they all have varying levels, even within the same insurance company. It'll do gold, silver, bronze or something like that. So we're going to run through that. But if you're missing your fix of investing, don't forget, go and listen to Damien's Midweek Markets, which is out every Wednesday or Thursday.
Good stuff. So what are we going to start with this week?
Right, workplace pensions. Now, this is something that is perhaps, it is unfair. I don't like to use the word unfair because nothing in life and money is ever fair, but it's to do with tax relief on pensions, particularly for people who earn a low income. Now, that may be people, not just because they do low paid jobs, but we're talking about people who are perhaps part-time, they earn less than the 12,500 income tax level. So you know that income tax threshold where if you earn below that, you don't pay income tax. So most of those people are actually women, which is another reason to make a big focus on that in the podcast, because there isn't enough out there for women and money and things relating to women in particular. Because don't forget that a lot of women will take a break from a career or reduce their hours, so they will reduce their earnings when they decide to have children. Now, the issue is regarding the type of scheme you join at work. So we've got lots of auto-enrollment going on. There's lots of people joining workplace pension schemes, which is fabulous. But it's the way that the tax relief on pension contributions is being paid that's the issue. So I'll explain. When you join a workplace pension, there are generally 2 ways you get that tax relief on pension contributions. There is a type of scheme that's called a relief at source, and there's one called a net pay arrangement. But before I jump onto describing the difference, because it's important, it's just a reminder to people that when you pay money into a pension, you get tax relief on top of that. So basic rate income taxpayers get 20% relief, and then higher rate taxpayers get their marginal rate as well. So it's a Brucey bonus. It's the government trying to encourage you to save for your retirement. But what happens is that if you are in a workplace scheme that operates under a relief at source mechanism, the way it works is that the employer taxes your earnings as normal. So we're just talking about your pay, so your net take-home pay. So you get your earnings, they take the tax off, you get your take-home pay. But they then take 80% of what your pension contribution would be. So let's just say £80 if it's going to be an overall £100 contribution. They take that, they give it to the pension provider. The pension provider then reclaims the 20% tax relief that you are entitled to. So in simple terms, they take the £80, it gets rounded up to £100. That's the way pensions generally work. And that's fantastic for people who are on low incomes because it ensures they get the tax relief. I mean, higher rate taxpayers, they will have to then claim the additional tax relief above the 20% via their tax return. That's just the way the world works. The problem comes is there's a second type of arrangement. So they might have the same pension scheme, so the same concept, you're taking money, putting it into a pot, but it's called a net pay arrangement. And what happens is the employer takes your pension contribution from your gross pay, so there's no tax being deducted, deducted, and then they tax your pay in the usual way. But the pension contribution is then given to the pension provider straight away. So it's the whole £100. So that goes over to that pension provider. They don't have to claim the tax relief because they've got the full 100. The way the relief would work in this scenario is because they've taken it out of your gross pay, and then that amount, what's left over, is then taxed. You're actually getting taxed on a smaller amount. So in a roundabout way, you're getting the tax relief because you're getting more take-home pay. And that's fine for most people. The issue is if you earn below £12,500, which is the current personal allowance, if they took that £100 from your pension pot and they give it to the pension provider, and obviously you've got now a slightly reduced net income, you were never going to pay tax on any of that income. So you've not actually gained any benefit by having a greater take-home pay, by paying less tax on the amount that your employer gives you. So what it means is that there are 1.75 million what they call low-paid workers who aren't getting tax relief on their pension contributions. And it's an enormous amount of money. It actually saved the government £140 million that they should have paid to people, but they haven't in the form of tax relief. Now, this is just something they're entitled to. It's not about giving low-paid workers an additional benefit that everybody else doesn't get. This is just their entitlement, because this is what everybody else gets, the tax relief. So we've got a problem here, and the government hasn't fixed it. They're just sort of burying their head in the sand about it. And it isn't right. So if it doesn't impact you, it may impact your spouse, it may impact your parents, or it may impact your children, assuming they are adults and have got jobs. So there is a petition that's been set up, and I've signed it, and it's a petition to try and get this changed. At the moment, it's got a ridiculously low level of signatories. It's at 781 at the moment. You need 10,000 for the government to have to make a statement about it in the House of Commons. So if you want to sign that petition, and I urge you to do it, it's petition.parliament.uk/petitions/261 which is the number of the petition. But if you go on that site and you start to search for reform the payment of pension tax relief, then you will find it. So it's an FYI for people out there that if you're missing out on pension contributions, it's an unfair system. You need to sign a petition so they change it. It is different to salary sacrifice, because I think there'll be people confusing the two. Salary sacrifice is something very different. It works in a roundabout the same way, but where they actually change their contract of their employment, so they earn less, they get paid less in exchange for a pension contribution. But in doing so, they save national insurance, and so does their employer, and often that employer will put that into their pension scheme. That's something that is of interest, and I've had some exchanges with listeners about salary sacrifice. Maybe it's something we should do on a future podcast. But this, what I'm talking about now, is people who haven't changed their employment contracts. This is just them getting pension contributions paid into a pension scheme under a net pay arrangement, and they're losing out. So watch out for that.
Find out how fit your finances are for free with Damien's Money MOT. With no registration required and no need to access policies or paperwork, you'll receive your own personal grade, together with a breakdown of where you should focus your attention, all in the time that it takes to boil the kettle. Crucially, you'll get to see how you measure up compared to everyone else, and even get your own tailored plan on how to improve your score. Simply go to mot.moneytothemasses.com. So sit back, relax, take Damien's free Money MOT, go to mot.moneytothemasses.com to get started, and reward yourself with that cup of tea afterwards.
Okay, Damien, so it's that time of year where everyone's thinking about holidays. What have we got?
Right, travel insurance. I mean, it's one of those things that I take out travel insurance, obviously, and I tend to take it out for a year if I think I'm going to be going away on different trips, so it's cheaper. It tends to be, it's take out an annual policy. The issue I have, which we've covered once or twice before on the podcast, is regarding medical conditions and my Crohn's. My travel insurance is ridiculously expensive. So therefore, in order to reduce that, I would need to sometimes take a lower level of cover if it's for the other parts of the policy, just to try and bring the premium down. But of course, what is a decent level of cover for, say, cancellation or medical cover and things like that? And you never really see an answer out there. And there were some interesting bits and pieces in the press and stuff I've been reading online recently. And I think The Guardian did a piece on travel insurance and what to look out for, almost a checklist. So I want to run through that with people, because you may be taking out a policy and this might be a useful checklist of things just to see if your policy has them. So medical cover. So cover for if you become unwell abroad and you need medication or you need to go into hospital. They say about £1 million worth of cover in the EU and 2 million in the US is a good benchmark to go for. The other thing, if you're going to look on a travel insurance policy, is repatriation.
Bringing you back.
Bringing you back. So if you've decided to do something reckless, or you just had an accident and you are unwell in hospital, bringing you back to the UK costs money, and not all insurance companies will actually cover it. So you need to check that's in there, because you see these stories in the national press of people having family members they can't afford to bring back from somewhere abroad because of the cost of the repatriation, and the insurance company won't pay for it. Cancellation or curtailment. You need to make sure that the amount that they cover and what they cover for is in excess of what you're going to lose. So if you're going to have a holiday and you're booking holidays for $2,000, $3,000, $4,000, you need to make sure that the potential losses the insurance company will cover will exceed the losses that you're paying. So that may be, they say on average $2,000. That seems a little bit low to me, because if you've got a family of 4, you don't get much change out of $2,000 if you want to go abroad, to be honest with you, these days. So check that the cancellation and curtailment fees are on there and what they include. See whether they will cover you for missed flight or trains that mean you miss your holiday. Now, I went away recently and there was a massive snarl up on the M25. It was an 8-mile tailback. Fortunately, I just missed it, got on the flight. But when we were on the flight, the air stewardess said that there was a family of 7 people who didn't make the flight because of the 8-mile tailback. And so things like that, no matter how much you plan, you can never quite plan for that. So you need to make sure, have a look what your policy will do in that case. If you don't make your flight, what sort of compensation do you get? Things that are outside of your control is key. Lost baggage. Now, some policies require you to have receipts for your items if they're lost. Now, I remember, again, I seem to have all these stories with travel insurance. I went to Barcelona many years ago and we put our bag to go onto the plane, and we're at the airport early. And when we got off the other end, someone had been inside one of the bags and taken a load of items. And in order to get that back, we ended up having to produce receipts for the items that were in that bag, which can be quite difficult, because if the items are items that you bought a long time ago, then that might be an issue. So have a look to see whether you are required to produce receipts and what they will cover. Look for something that's going to give you perhaps £1,500, because most people don't tend to take items worth more than that on holiday.
It's strange. Every time I travel abroad, I always take all my jewellery with me. So my last claim was £17,600. No, it wasn't.
No, but it's a fair point, because if people do take wedding rings and engagement rings and things like that on
electrical
holiday,
items are sometimes packed in the hold as well, aren't they?
Well, I don't put mine in there, but I would put mine in the cabin, because they'd probably blow up and freeze or something like that. But
I'm thinking things like hair straighteners and bits and pieces.
I didn't want to burst out laughing there, Andy, because I'm looking at you.
You're looking at a bald man.
You said hair straighteners. I was thinking, what for? Sorry, I wasn't laughing at your
follically challenged situation.
No, moving on. Personal liability or being sued for injury of somebody else. Look for more than £2 million on that. Have a look to see if there's anything covering dental treatment. Scheduled airline failure. We talked about that before. You sometimes see that abbreviated as SAF. So if the airline isn't able to provide your flight, it goes bust. Not all of them cover that. Acts of terrorism. I know we don't want to think about those sorts of things, but again, see if the policy has that. What do they do about lost cash, tickets and passports? Because some of them are quite miserly on the amount of cash they will cover. If you go down towards the basic end of the policy, so if you go for a company and you go for their lower policy, they actually don't cover you for all that much. And so if you're going to be taking cash with you abroad, then you've got to realise you're taking quite a big risk, because if you lose that, you're not going to get it back. In any event, things like Revolut and Monzo and app-only banks and entities, there's almost no reason to have to take cash abroad, because some of those allow you to withdraw cash up to certain limits from ATMs abroad anyway. I'll tell you a story on this that happened to a family member. I've always got these stories about holidays. I don't know if it's just because I remember the things that go wrong, but somebody...
Or maybe you lot take too many holidays.
No, it wasn't me, it was somebody else. They put their passport, their money, everything in the safe in the hotel. When they were out of the hotel, somebody came into the room. It was somebody who clearly worked there, because they didn't force entry, and pulled the safe out of the wardrobe. They wrenched it out, went off with the safe. The person then somehow managed to open the safe before the people were aware of what was going on, got their cards out and took some money from their accounts. And there was a big issue with the insurance company, because the PIN number that they'd used was their date of birth and the PIN number I'm talking about on their own cards. And of course the person had their passports. So they were saying, well, you've actually kept something that was information that they used to take money from you in the same place. So there was a big hoo-ha over them trying to get the money back, and the insurer wasn't going to give it to them. So I hope people don't use their date of birth or their PIN on cards, but any information that could, because I know a lot of people, they don't use their date of birth, they use their partner's, because they think they won't get me. And so if your partner's passport is in the safe as well, it's just something to bear in mind. Children as well. I have to say, we all do that. They won't never guess my kids.
There's about 1,000 listeners now contacting their bank, changing their PIN numbers.
Yeah, and it's even silly things. You get the combinations on your suitcases. It's things like that you use part of dates of birth because you think they won't know them, but you've got all that information together. I'm just throwing it out there. They had a real issue with the insurance company saying they wouldn't pay. One other thing to check is the excess. Is it per person on the policy if you make a claim, or is it for the entire policy? People don't realise that often it's per person.
Also with the excess, you will be required to actually physically pay that. When you make a claim, you sometimes think that it will just be deducted from the overall claim. What tends to happen is you get paid the claim in full, and then you'll have to pay your excess out of your bank account. It's something to do with the transaction, but yeah, be aware of that.
Staycations. Now, I just mentioned that quickly. We did a whole article on the website recently about staycations and the implications of travel insurance and home insurance. Travel insurance still covers you for staycations because it's still a holiday. You're still travelling somewhere. And as we said, there are things like missed trains, flights. I mean, you can fly internally in the UK. Anything like that you'll be covered for on a travel insurance policy as if you were abroad. So it's worth bearing in mind having travel insurance for staycations. And that's, of course, if you have an annual policy, if you decide to do a trip of some kind, then it will be covered. The only other thing to bear in mind, some people say, oh, well, I've got my home insurance policy. Would that not cover me? It very much depends. Every home insurance policy is different. Sometimes you have to specifically ask to have items covered that you lose outside of the home on a policy. But of course, that won't cover you for everything and all other eventualities. And normally those items, if they're expensive, have to be named. So again, it's worth having travel insurance. And before we move on to the last piece, I'll just throw out there do you remember the old E111 EHIC cards? They're called European Health Insurance cards. They still obviously exist. I know we're all thinking about Brexit, but that's the card that allows you to get discounted or free healthcare in the European Union if you become unwell. Basically, it's a card that what it does, it allows you to be treated as if you were a resident of the country you're in. So it's that kind of when in Rome element. And some people think, well, I don't need that because I've got travel insurance. Well, it doesn't always work that travel insurance will cover you because, to give you an example, we all love to drink on holiday. Now, a lot of travel insurance won't cover you if you were drunk and you did something silly and you became injured and hurt. Whereas the EHIC card would cover you because you're treated as just as if you were a drunk person in Rome. So that was a resident. So it's worth having them. You can still apply for them. I know Brexit's around the corner. No one really knows what's going to happen. Of course, the British government is going to try and keep some of those benefits. Whether they are successful is another thing. So that's it for this piece.
Okay, so that leaves us with PPI to finish up with. And there's a deadline looming.
I feel like I've talked enough on today's show. So Andy is going to take over this part, partly because Andy did a piece about it. The reason it's relevant is because there's less than 10 weeks until the deadline for you to claim PPI. And I know a lot of people out there are thinking, I've got to get round to claiming. I think I was missold PPI. They don't quite know the rules. Andy is going to quickly run through it for us.
Yeah, we're going to rattle through it. There's lots and lots on the internet. And actually, there's a really good piece that's been done by the money-saving expert, Martin Lewis. We know who he is. Stick it into Google and you'll find his guide. It's really, really good. It is quite lengthy. It will take maybe 15, 20 minutes to read through. But if you're considering on doing this, then go and visit that as your go-to thing. I'm just going to rattle through a few nice to know bits and pieces in case you're thinking about doing it. So when is the deadline? The key date you need to think about here is the 29th of August 2019. And that, as Damien said, is only 10 or so weeks away.
And that's the deadline for you making a claim. That's not you being paid out. That's just you pinging a claim to the mis-selling entity.
That's it. The claim's got to be with them by that date. So don't put that date in your diary thinking, right, that's the date I'm going to submit my claim, because often these things need to be done via the post. And so if you're doing it on the 29th, you're actually going to reach them too late because it needs to be with them by midnight on the 29th of August. So set a date at least a week before that to start thinking about this.
So let me ask you a couple of questions on it, Andy, so we can go through this. How do you know if you've been missold?
Yeah, it's a good question. There's basically 4 key criteria for working out whether you think you've been missold. Firstly, if you didn't agree to take out PPI, so that basically means that you've been missold. If it wasn't made clear to you that you were taking out PPI and you didn't actually want it, that's another reason. If you were told that if you didn't take out the PPI cover, you wouldn't be able to get your loan or your credit card. So basically, it was used as a bargaining tool in order to get the loan. That's a case of mis-selling. And if your PPI wasn't properly explained to you at the time, or you weren't advised what it is you were buying at the time, then that's another reason for...
And there's loads of people who were told to take out PPI, even if it is explained to them, as if they would be able to get it, and they did a job that was never going to be able to make a claim on. So they were never actually eligible. So that is an obvious case of mis-selling.
Exactly right. And actually, interestingly, you don't even need to have been missold PPI to have a claim on PPI, because there was a court case in 2017 known as Plevin. There was a lady called Susan Plevin that, although she wasn't missold PPI, she looked at her paperwork and thought, hang on a minute, my bank has earned thousands of pounds of commission out of this. I don't think that's right. I wasn't told about this. So although she wasn't complaining about the actual PPI being sold to her, because she was aware of that, she wasn't aware of the actual way the commission worked. And had she have known, she wouldn't have taken out the PPI cover. So that's a case of Plevin. Now, there are apparently 1.2 million people that were rejected a claim based on being missold that actually would have been able to claim under the Plevin rules. So that's a key thing to know. Don't just think because you knew about PPI that you can't claim. You often can.
Google Plevin. Plevin. So what about checking if you had PPI, Andy?
Yeah, so if you want to check that you had PPI, if your loan was in the last, or loan or credit card was in the last 6 years, then all you need to do is contact your provider, because legally they have to keep paperwork. Now, if it was slightly older than 6 years, then that's fine. Still go back to that provider and say, I want you to provide as much information as you can. And legally, they have to come back to you with something.
Yeah, and then you can make a claim. So the onus is on them now. Because I think that originally people had to go and prove evidence years ago. But now, I'm right in saying the onus is very much on the company to prove they didn't missell to you.
Yeah, and I'd recommend that even if you can't remember about the PPI, or you haven't got cast iron evidence that you were missold PPI, or even had PPI, do you know what? Submit the claim through to them, because that's what I did. That's what a lot of people do. No one really knows. If you haven't got the paperwork, people can't remember. So chance your arm and send them, because they have to legally respond to you whether you've had it or not.
And I just want to say, from a personal perspective, people are unlikely to necessarily know, especially a long time ago, because people didn't know what PPI was. And I remember I was young in the days of 21, the days where you got signed up to credit cards because you could go and do whatever you wanted and buy the moon on a stick because you were young and naive. And I remember having a huge credit card bill and debt, and then looking at the payment and thinking, what is this £30 a month I'm paying? And I remember going to a particular company and saying to them at that time, and perhaps this was the seed of me one day getting into money to the masses. I said to them, what is that £30 for? And then it was explained to me, which obviously subsequently has been known as, or we've been more widely called, PPI. And I had no idea. I mean, I didn't know I was signing up to that, because it was a case of these things. Do you remember when you used to walk through shopping centres and there'd be a lady on a stand who'd sit there and flog you a credit card and get you to sign up? They're on commission. So that's how lots of these things happen. So if that was you, if you were as naive as I was then, which most people probably were at some point, then there is a good chance you have PPI. It's not just about trying to game the system and get free money, because trust me, if you're not entitled to it, you won't get it. I know there'll be people out there probably thinking, oh, well, these people are going to just try and get PPI. They won't pay you if you're not entitled to it.
So talking about paying you, and if you're entitled to it, there's 2 ways to make a claim. Firstly, you can use what's called a claims handler. Now, they're the people that tend to call you in the middle of the night and pester you and hound you. They've given them a bad name, really. There are some reputable companies out there that will do a lot of the work for you. So if you can't be bothered to do the work yourself, then you can use a claims handler. Just be aware that you may still have to provide some information. It's not all down to them, and you'll end up giving a sizable chunk over to them as a commission fee.
Yeah, about 20%. So don't do that. I mean, it's only if you can't be bothered, or there's issues with you being able to communicate with a company or something, whatever it is, you could do that, but do it yourself. As Andy said, Martin Lewis has spent the last God knows how many years banging a drum on PPI, and he's got some great templates and bits and pieces. I know it's got to be a bit of work, but you may get something back out the other end, and he's got templates and everything. You can do it yourself. If you think that the typical PPI cases that I've known people to get money back on runs into the thousands, you're talking 20% is likely to run into the thousands itself. So why give that away for just a little bit of research?
And just to finish up, I don't mind saying this. I finally took the plunge and did the claim myself a couple of years ago. I'd put it off because one, I didn't think I had it, and two, I really couldn't be bothered. But I took the plunge when I had a few moments spare, and delighted to say I got £7,500 back.
Put it this way, I'm just banging the drum that it's not about being stupid or thinking that you won't know you're necessarily being missold. I almost lost count of people I know who have got money back from PPI. I even know people who have got money back under PPI, but they didn't even claim for it because the companies contacted them and said, I think you've been missold by us, and then they got money back. So do check it. 10 weeks, otherwise you've missed the boat.
Oh, yep, going full circle to low earners, who we talked about earlier in the pension piece, who always seem to get the brunt of the deal. If you have already claimed PPI, then the old system that the banks used to do is they used to automatically deduct 20% for tax, trying to save you time and money and everything else. But of course, if you were a low earner and you earned below the earnings threshold for basic rate tax, they would have taken 20% off of you unfairly. So actually, you can still claim that tax back if you've already claimed. And there's ways to do that online. So make sure if you have already claimed PPI and you're a low earner that you claim that back. Right, we're done, I think.
I think we're done for this week. As usual, do contact us, Damien at moneytothemasses.com, Andy at moneytothemasses.com, Twitter, which is money to the masses with a number 2. And of course, go check out Tarquin on Instagram and send in pictures and everything and communicate with us on social media.
Don't forget www.moneytothemasses.com/newsletter. Pop in your email address and become one of the thousands of people who get a weekly bite of Money to the Masses every Sunday at 10 o'clock.
Do you know what? More than 30,000 people have signed up to that email.
There we go. You could be 30,001. Until next time.
Till next time.
Don't forget to claim your free copy of Damien's best-selling book, The 30-Day Money Plan. Sort your finances in just 5 minutes a day, worth $4.99. Just go to moneytothemasses.com/podcast to find out how.